Yeah.
Yeah, sure. I guess I can put this.
Ooh, and it's a thick red juicy candle.
Yeah.
Hopefully it follows through.
I'm thinking. I mean, because that buying there was kind of ridiculous anyway. That came through.
Well,
Now
it
this
already broke
rejection's-
below the mid Bollinger Band, so
Yeah.
we've crossed into the downward pressure again.
Whoa, what's happening?
Just Apple.
Oh,
No, with
what
me.
are you doing?
I can't click
What are you
on
doing?
stuff. All right, sorry.
Stop doing that shit.
I'm live.
Do you see what I mean? This dip buying. It's like, I swear.
So, sorry,
That
definitely.
wasn't even a dip.
Sorry,
I
definitely
know.
post that in the call channel because people are asking if we were actually going to go live. So.
Oh, okay.
Oh wow, and I'm sharing my own. Drunken YouTube is fun. I already have 5 watchers.
And then we can't be held liable for his drunken antics on his own YouTube.
That's not true, TJ. You are completely liable.
I didn't do squat.
I'm
only a mod around here.
You did something.
All right, go ahead and start.
Oh yeah, I'm gonna give people a minute to hop in here, but yeah.
Are they going to be able to hear you considering you're in the Discord chat?
No, yeah, because I'm live on YouTube.
So will they be able to hear us?
Yeah, they can.
Yes. So any audio he has will be heard.
They can.
So how are you doing? Are you just are you gonna have no questions and just tell people what to do?
Well, I mean, they'll have to, if they want to ask questions, they'll just have to type it out in YouTube or in Discord.
Right. And in which Discord?
I mean, I'm always active in the call options.
Yeah. Yeah. Okay.
That's my people there.
Yeah.
That's where he usually takes his questions.
Yeah.
Is in the call options chat of Discord.
Even if it's about puts.
Wrong chat.
No, I don't care. I kind of want them to be the same one. But there's so many balls in the chat that are like, "Oh no, putting's evil. Short sorting's evil." Like, fuck you. I hope you haven't started yet.
I have.
Oh, he has.
Asuri's responsible for all the cussing.
That's my stance there on people that don't like playing both sides of the market.
Yeah.
Just do it, be profitable, and you'll be so much better.
Warning, today's stream will not be safe for work.
Well, you can edit that out.
No, this is not safe for work. It's live. I can't edit live.
You can always start again.
Start again.
Yeah.
All right, I'm going to give people a few minutes to get in here. That's TJ the Goat you hear. Yes, Brendan. Yeah, we're going to be going over bull flags and bear flags really quick. It's going to be a short video. Honestly, I'm drunk. It's going to be fun.
It's all good.
Yeah, we got Asuri and TJ in here with us on Discord.
I've also had some beer too, so it probably won't be more lively.
It's 5 o'clock somewhere.
It's 8:20 here, so I'm definitely allowed to drink.
It's 12:20 in the morning or afternoon, I guess. I'm allowed to drink too. My wife said so.
Yeah, it's always
5 o'clock somewhere.
Doesn't matter what time it is if the wife says yes.
Where did you post it, Asuri? Oh, you posted
it in call, put, and general.
Oh wow, okay.
I can at everyone as well, but it's a bit obnoxious.
Yeah. Well, we only have 12 people, so that's why I was asking.
Okay, fine. Let me at everyone. Edit.
I'm one of those 12 people.
Nice.
I'm listening to ourselves.
I hope you guys are enjoying my black screen.
Your screen of nothingness?
My screen of nothingness.
I mean, you couldn't have at least given us a ticker to watch?
Here.
I see how you are.
Here. There you go. There's your ticker. I wanted a screen I could draw on, so. Thank you, babe.
There you go. 50,000 people been atted 3 times.
All right.
Should get a few more viewers now.
I'll give it just a minute and then we'll get started. This is going to be a really easy class, and this is the way I taught, and I'm not saying this like to talk down to anybody, but this is how I taught my 7-year-old bull flags and bear flags. And it was actually like eye-opening for me. I was like, oh, I should teach it to like everybody like that because it's so easy. Um, so hopefully this helps some people out. I'm sure Asuri will get a lot from it because, yeah,
Yeah, I'm not very good at this
he's
trading
not
business.
good at the trading stuff.
I mean, my Apple position says I'm not.
All right, we'll go ahead and start now. So I'm just starting with a blank screen. Hopefully, no, that won't work. Oh, here we go. Okay. I think this is what I wanted. Maybe not. Nope. Bummer. I had drawn everything. We'll start over again. Sorry. Like I said, this is a drunken stream. So, basically, I'm pretty sure we can all agree the market tends to move like this, right? You'll see upside, and then it'll trend down for a minute before it goes more upside, and then trend down before we see more upside, and so on and so forth. And then at some point, we might even see, I'm throwing this in here for like extra teaching. I don't normally see this. You'll normally see like a high, and then you'll start forming like lower highs and lower lows. But let's just pretend, because consolidation is important as well, knowing how to trade consolidation. But so hopefully everybody can agree this is how the market moves generally. I mean, of course, it's never perfect and it doesn't happen, perfectly like this. Otherwise, it would be really easy to trade. But so we have our uptrends, which is this side here. So we have a higher low, higher high, higher low, or sorry, higher high, higher low, higher high, higher low, higher high, higher low. And then this is a lower low, sorry, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So everybody should understand that there's basically three phases of the market. We have uptrends, downtrends, and consolidation here up at the top. For me, consolidation, very simple. You draw a box. And from this box, you don't take trades inside. If you happen to break to the box to the upside, you would take calls. Or here, where you break to the downside, you take puts. This is where the bull flags and bear flags come in. So with our normal, our normal market, this is our candlesticks here coming down, 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 moving upwards. And then they start coming down here, and they would form the actual flag of the flag. In this case, our bull flag, right? So here's our flagpole, and this here would be our flag. And we'll look at this on live charts in a minute. But this, I think, is the best way for me to explain it in a way that people can see it without the candlesticks being there. And I'll draw this in a minute with candlesticks, and then I'll remove the candlesticks so you can see it looks the same. But so with this, if we have our candlesticks here, sorry, it's going to be a little hard for me to draw, but like if we have a candlestick like this, basically you're going to take the last touch of the top of this flag as your safe entry. So there's a few entries you can take. You can either take, actually, sorry, really quick. If I extend this line out, it'll make more sense. Nope, I'm extending all of the wrong lines. This is a drunken stream, so you have to bear with me. All right, so let me just fix my flag here really quick. So where this top line here extends down, if you take the break of that, that would be your riskier entry. So you could take calls right here. And that's perfectly fine if that's how you like to trade. That's going to be your riskier entry. Your safer entry would be sorry, this is sideways and it's going to bug my OCD. Your safer entry is going to be the last place a candle touched the top of the flag. So you could either take calls here when we break the top of the flag, or you can take calls when you break or when you cross above the last touch of the flag. So to everybody, I think this should be really simple. You know, you have your uptrend, and we see downside and then back up. You just draw a flag pattern where you have that slight pullback, because everybody knows, you know, the ebb and flow of the market is up, slightly down, or in downtrends, it's going to be down, slightly up, down, slightly up. And so then for bear flags, just in case I didn't say this, this is going to be our bull flag here. For bear flags, it's going to be the same thing. You draw your flag here on this side. Then let me extend this out. And the same thing, we either take the break here of the line, or we look for, you know, the last place a candlestick touched the flag. Sorry, this should be, wow. This should be extended out as well. So the last place a candlestick touched the flag for our bear flags would be exactly the same thing. This is our riskier entry here, and our safer entry is going to be here. So hopefully this is really clear to everybody. If you have questions, I'll be reading through the Discord. No, Bridget, just drink. It's okay. Just tell whoever is you're responsible for working for, just tell them it's Friday afternoon. It's 8 o'clock in the evening, or sorry, 10 o'clock in the evening in England, and we're a bunch of alcoholics. It's okay to drink right now.
It's 8:30
or whatever, 8:30. It's after 5. It's after 5 p.m. And Asuri said to have a pint, and so just tell your boss that, and you're good.
I'm on my second. Don't worry.
Exactly. So Asuri's on his second. You can be on your first. It's perfectly fine. So hopefully this makes a lot of sense. I mean, like, to me, this is the easiest way I can explain bull flags and bear flags. The normal ebb and flow of the market, you see upside, you see a little pullback before you see more upside. So that's exactly why you draw your flag there, because you're expecting when it breaks out of this pattern to see more upside. So we'll swap over to SPY right now, and we'll look at this live on charts. Today was like beautiful for bull flags, like all day long. And I'll draw them, and then I'll remove the candlesticks so you guys can see, you know, exactly what we're looking at. So for me as a trader, I don't bother drawing the whole flag, but for you guys, I'll do it so you can see. This is all I'll draw. Right here, this is the top of my flag. I know as soon as I break this, I can take calls and I'm good. I have another one here. And again, like all day long on SPY, you're going to see bull flags. Like there was a million of them, right? But so if I want to be more technical, I guess the bottom of my flag is here. Again, you don't really need the bottom of the flag because you're not trading the bottom of the flag. And your flagpole is going to be, you know, from the bottom here to the top. And then on this one, same thing from the bottom here to the top. And we're going to actually get more in depth on these really quick. But for right now, I'm just drawing these lines so you guys can see them. So these right here are going to be all of our bull flags for today. I mean, there's more up here, but this is really not tradable. This here is exactly what I was talking about, where we have consolidation. You don't try to trade this. You draw a box around it. And if this breaks to the downside, you can take puts. If we break to the upside, we can take calls. This is really easy. If you want to get really technical, which is perfectly fine, these are going to be measured moves. So where you have rectangle consolidation, you can measure from the top to the bottom. So this is a 0.43% move. And so I can then measure from the bottom, if I was taking puts, down 43%. And I can expect this to move down to, if it breaks to the downside, I'm going to see 433.09 would be my target for exits. If we break to the upside, same thing. I'm going to do 43% with the correct drawing tool. 43% to the upside. And my exit would be here at 439.67. So both of those, this is, again, a measured move. You measure the entire... Wait, I didn't measure the entire thing. I was holding down control. Good job, TradingView. So actually, this is a 0.65% move. Hopefully the Drunken stream is amusing for you guys, because obviously I can't even use a measurement tool. So my exit for puts would be 432.06, and my exit for calls would be 440.61. Yeah. I love it, Efren. Get that last stock. Get that tequila drink. Sorry, just reading through the comments here really quick. Brennan, so this is in TradingView, it's going to be the price range here. So sorry, I'm just leaving it up on the screen for a second so you guys can see it. But so anyway, let's get back into the bull flags and bear flags. That was the focus today. So again, I just draw the top of the flag because I don't need the bottom. I'm not playing puts if I break the bottom. So I'm going to delete these because to me they serve no purpose. I also don't normally draw the flag pole, but I'm drawing it for you guys so you can see. And actually this one's wrong. This is our flag pole here. I'm just drawing them right now for reference sake. But with bull flags and bear flags, they're going to be measured movements. You use your Fibonacci retracement right here. And I'll show you guys the Fibonacci levels that I use. So you just choose the bottom of the flag here, the flagpole, to the top of the flagpole. And your first exit, and I love how this always plays out. If you see here, this is the February 22nd POC. Lines up perfectly with the 272 level. I mean, like literally to the penny, lines up with the 272 level. So on a bull flag or bear flag, it's going to be a measured movement. You click from the top or the bottom of the flagpole. The bottom if you're doing calls to the top. For bear flags, you would do from the top to the bottom. And I'll pull up these are the only Fibonacci levels that you need. So if you need these, pause the video, rewatch it, pause it, and copy these into your TradingView or whatever app you use. And so your first trim level, so let's say you take 5 contracts. Your first trim level is going to be 272. I would trim, 4 of my 5 contracts here, or 8 of my 10 contracts here. And your second trim would be the 618 level. Your 272 becomes your stop loss. So like here we come up and then we come back down, you would stop out here. So those trailing runners that you left, you would stop out of them when you come back to the 272 level. If you did make it to the 618 level, you would cut them there. And if you got 10, you would cut your 9th contract here, and you would cut your 10th contract here at the 786 level. And so then after this bull flag plays out, we have another bull flag that forms. Same thing. We're going to grab our Fibonacci tool, pick the bottom of the flagpole. And for anybody that uses TradingView, you can press down Control. And you can see when I press down Control, it selects my magnet tool for me here, which has it locked to like the highest candlestick. Or whatever, it has it locked to the candlestick that I hover over. So here's the top of my flagpole. So as soon as this breaks here, I would take calls, or your safe entry, again, is going to be the last touch here. you would hop in and play up to the 272 level. You would take your first trim. Your second trim would be at the 618 level, and your third trim would be at the 786 level. And on this flag, all three would have played out, and you would be very happy. You'll make a lot of money doing that. So if we remove really quick our candlesticks, there's your flagpoles, your flags and flagpoles. It's very easy to play. So, you know, it's the same thing I was showing you guys. If I just, well, let me remove this. But, you know, here's our normal ebb and flow of the market that I was showing on the previous screen before we had our candlesticks on there. Of course, it doesn't look as pretty as what I drew out before. But, you know, you can see this is exactly what I was showing. You see upside, a little pullback, and then we rip up again. Upside, pullback, rip up again, right? And so this is how you want to play your bull and bear flags. It's really, really simple. And when I say that, I'm not trying to insult anybody that might be having trouble. If you're having trouble, you just need to slow down and be patient and wait for the setups to come to you. You can find bull flags and bear flags all day long on a lot of different stocks. I would really recommend, like, if you're a newer trader, look to play SPY, SPX, or Apple. Those are both like high volatility, high volume stocks that are easy to trade. And once you learn how to trade those, then you can move on to other stocks. Or as you get more comfortable, you can add more stocks that you're looking at one time. You know, me, I watch, and this isn't bragging. If we look at like my main trading screen, I'm watching 5 stocks here. On my second screen, I have another 12. And then on another screen, I watch ES, NQ, AD, and VIX. I'm trying to do math. I'm drunk. That's what? 16, 17, 18, 19, 20. Oh no, 16, 17, 18, 19, 20. So I watch like 21 tickers at any given time. But I started with just watching SPY and only trading SPY. And actually, even today, that's a lot of what I do. I'll mostly just trade SPY. Today, for example, sorry, let me grab my orders. I traded SPY, calls, and puts. I traded ExxonMobil and Tesla and S, whatever that is, like Century Security or something like that. So I only traded 4 different tickers today, and I traded SPY like multiple times. And really, as a newer trader, like SPY, you can trade it 4 or 5 times in a day, which should be more than enough to make enough money in one day and then live to trade the next day. So that's really going to be it. Like I said, just a quick short video on bull flags and bear flags. Okay, Riley, so I am not a swing trader. I won't even answer these questions because I'm a breakout trader. You know, like sorry, I don't know how to pronounce your name, but X12 dose or something to that effect. Pointed out I'm looking at a 3-minute time frame. That is my preferred time frame. I watch like the 1 minute, 3 minute, and 5 minute. So these breakouts happen really quickly. You know, if we were to count like this bull flag here, this is 3 minutes, 6, 9, 12. So like even if you played all the way to the very top, you're out of this trade in 12 minutes. So I'm not somebody that can talk about swing trading. The one thing I can tell you about swing trading is this market is very volatile and it's not good for swing trading. But if you are a swing trader, you know, like you would look for bull flags, bear flags, or whatever else on like the 30-minute time frame. Um, so like here's a flag on the 30-minute time frame from here. It's actually kind of hard to draw, but yeah, something like this. You could take calls here all the way up. But it doesn't match my trading style. But so for swing traders, you want to be looking at 15-minute, 30-minute, 45-minute, 65-minute, hour, 2-hour, 3-hour, 4-hour day. Anything you find on a shorter time frame, these are going to play out faster, just within minutes, sometimes seconds. Any patterns you find on a higher time frame, like if you find a flag on a 1-day time frame, it'll take a lot longer to play out. So hopefully that answers your question. Like, you want to look for patterns on a much longer time frame. I would say 30-minute, 1 hour, 2, 4 hour, possibly even day, week, month. Those plays are going to take much longer to play out. So you can swing those trades. But honestly, this market right now is not favorable to swing traders at all. So I wouldn't even recommend it. And if you're thinking like, this is a huge misconception in the trading community, is people think they have to have $25,000 to day trade. That's not true. You have to have $25,000 to day trade on margin. So if you make a cash account on any like real broker, like ThinkOrSwim or Webull, as long as when they ask you, do you want margin or cash, you choose cash, then you can day trade all you want on your cash account under $25,000, and you don't have any restrictions as to how many day trades you can take. So hopefully that helps you out. I really, nobody under 25,000 should be trading margin within reason. Excuse me, I had to cough. MDR condos, I don't know what that means. Sorry. Sounds like somebody's advertising. Go ahead, advertise away. So, but yeah, no joke, I am actually really drunk.
I think that's her name.
Oh, okay.
Like with the MDR condos.
Oh, okay. All right. I mean, it doesn't matter to me. I don't care. But so, yeah, hopefully that was informative for everybody. It is super, super easy. I think people like really want to overcomplicate like technical analysis and charting. And really, it's not complicated at all. You just have to have confidence when to take the trades. I mean, you can see every single one of these flags on Tesla today. If you took the break of the flag or even the safer entry of the flag, you're good on every single one. Even up here where we get into this consolidation zone, let me just draw it just with fibs because I don't want to lie. Yeah, so our exit's the 272 level, and we cross above that, and it would become your stop loss, and you're good, you're out. So 3 bull flags on 1 day on SPY, every single one of them you can play. This is where you get patient, like we're just consolidating sideways. You wait for a break to the upside or the downside. There are traders that will take puts here and take calls here, which is doable. You can do it. That's more risky. You will absolutely get faked out, like when it does decide to finally break out of this consolidation area. But 100% you can trade like that. I traded Tesla like that today, where it came down and bounced off a consolidation area, and I played calls. I think it was. I know I played calls and puts on Tesla today. So you can absolutely do that if you feel comfortable. But just know when you're playing the bounce or rejection in a consolidation area, you're taking a riskier trade. Whereas bull flags and bear flags are much less risky. No, I meant Tesla. I'm showing SPY right now. It doesn't matter. It's the same principle. This is the consolidation area on SPY. I drew a consolidation area on Tesla, and I played the bounce. I can't remember if it was the bounce or the rejection, but I played one or the other on Tesla today. I don't know. I think I took like 6 trades today, 5 or 6 trades. I traded SPY and Tesla both, but yeah. But I mean, really, what I would tell everybody is don't overcomplicate it, and don't psych yourself out. Like, if you're not comfortable drawing a bull flag, then get comfortable. Like, if the next trading day, don't try to force trades. Watch what the market's giving you. Don't look for, oh, like today I'm bullish, today I'm bearish. As soon as you're watching SPY, like I said, you should just focus on SPY when you're newer. When you see this start to pull back, like right here, you would start drawing your flag. Even if I haven't seen this candle yet, I have my flag, here. And then as this candle forms, I would bring my flag down further to incorporate the top of this wick. And then when it breaks, I'll take calls. And I guess I just realized one thing I didn't cover. With your fibs, like I said, you choose the bottom of the bear flag to the top. Well, this gets to prove me wrong. It's okay though. Technically, if our price comes down below the 0.05 level, I know it's kind of hard to see, but it's this gray line. It's no longer a flag, which it does in this case, but it's still played out. So this is trading for you though. Nothing is perfect. If it was, it would be so easy to play bull flags and bear flags all day long. This one also came down below the 0.5 level as well. But just the wicks, both of them played out. It worked out. So that's really it for the class. I'm going to hang out for a second in case there's any other questions. Otherwise, I'm going to close the live pretty soon here. Just wait to see if anybody has any questions. Anyway, I really hope this is informative for people, and I hope it helps people out. Yeah.
Every little bit of education always helps. It's just another tool in the tool belt.
Absolutely. Oh, so what I don't think I finished this train of thought, but if you're not comfortable with this stuff, just start drawing them and watch to see it play out. You don't have to take the trade, but draw your bull flags and your bear flags and watch to see how it plays out, and watch and see what would have happened if you took the trade. And then that way, the next time you see like a bull flag or a bear flag, you're going to feel way more comfortable or way more confident taking that trade. Dose of Delvin, with the current market conditions, what I've been doing, actually the market's live, so I'm kind of afraid. Let me choose something ridiculous here. So I use Active Trader. I mean, I can go over Active Trader in another video, but I can place a limit order at any price with Active Trader. And then as the price moves, I can always move my limit order up. I'm going to cancel this because I don't want to accidentally get filled. And then once I'm filled, so right here, the 155 that's highlighted, this is where the price is currently trading. So once I place my order and I get filled, I'll put it like slightly, with today's market conditions, I'll put it just a little bit below, like here, for instance. I can't do it because I don't have a contract to sell. If I click this, it'll get rejected right away. But I can put a stop limit order right there. And then just like my sell order, I can just move it up or move it down as I want. And so what I do with my sell orders is I'll put in a sell order here, and I'll just keep slowly moving it up as my price goes up. But normally, in normal market conditions where it's not really volatile like it is right now, I actually just buy and I'll just wait. And then, once I'm up like 20%, then I'll put in like a limit order there and I'll slowly keep moving it up. Do I use EMAs. I do not hocus pocus, but I can give you, I can actually give you some information about EMAs. So one of the ways that my mentor grew his first account was trading the 9 EMA. And so let's take everything off of here. What he says is, you want the VWAP? Sorry, let me grab VWAP. So he says if you're below the VWAP for 2 candles, so 1, 2, you could take puts right here. Or sorry, below the VWAP and below the 9 moving average. So this is the 9. See, EMA. So below 9 VWAP and below the 9 EMA for 2 candles. So here's our first candle, or technically, I guess this would be first, second, I don't know. You can take puts to the downside. And then the same, once you're above the VWAP and the 9 EMA for 2 candles, you could take calls. Obviously, you're not going to take it when you're seeing red candles. So on my charts, blue is red, white is green. But here, once you're above for your second candle here, you could take calls to the upside. Same thing here, calls to the upside. And this is how he built his first trading account, was through the 9 EMA and the VWAP. So 2 3-minute candles above or below, you can take calls or puts. Draw a bear flag for reference. I'll find one for you. Yeah, for sure. I know I won't find one yesterday, but we'll find one. Oh, here's some. Here's a bunch I traded yesterday, or whatever. February 23rd. So, sorry, that's not a very good line, but this is your first flag right here. Hopefully everybody can see that clearly. Flagpole, flag, and then you would grab your Fibonacci, and you can see we hit our first exit here, the 272. Good. We didn't get to the second trim level. And then technically this here was another flag. I didn't try to play this one. No, it's not really. This comes back too far on the pole. It's more than 50%. Like way more. So you can see here's our 50%. And it comes back almost to the 786 level. So this was not playable, which is why I don't have any lines there. Here's another little mini flag. And if sorry, take this off. I mean, here you guys can see I practice what I preach. Here's my flag pole. Here's my flag. And my exit would be this 272 level here. Second trim would be the 618. Third trim would be the 786. And then if we come over here, we have, this is actually going to be a bear pennant. So it's the same as a bear flag. It's just shaped like a triangle. Doesn't make a difference. Play that to the downside. Here we have another small flag, another small bear flag. This here is another small bear flag. And then here again, this doesn't become a bear flag because we pull way back, but this is a trend level. I was showing this today in the call, chat, like where you find a trend line. You don't have to overcomplicate this, but so here we're looking at, this is our higher high, higher low, higher high. Oh, this is actually a lower low, lower high, and then we finally break through and you can take puts. So this is our trend line here. Here's another little flag and another little flag. All of those are playable. If you're a scalper, like all of those, every single one of these lines you see on the screen. This is one set here. I don't know why I drew the top of the flag, but if you hop in here, easy puts. Same thing here. If you hop in here, easy puts. Again, easy puts. Hop in here, easy puts. Hop in here. Wait, no, this ended up not playing out, so I should have just taken that off of my chart. But this trend line, if you took puts, you're good. If you took puts here, you're good. Took puts here, you're good. So every one of these lines that's on my chart is playable. So hopefully that helps you, Hamza. Hopefully I said your name correctly. Riley, I highly suggest you switch to a cash account. It's so much easier to make money when you're just taking quick scalps versus looking for a big move. For me, like I said, I think I took 5 or 6 trades today, and on all of them, I was out within minutes, and I grew my entire portfolio by 9% today. And if you can grow a $1,000 portfolio by 2.5% every day for a year, you'll have like $600,000. I think 5% is doable, but you're going to have losing days. So I say 2.5%. I think most people that are in this room right now, $600,000 is life-changing money. And especially if you can do it consistently, if you can make 2.5% consistently, week over week, day over day, you'll be a millionaire before you can even bat an eye, even just starting with a $1,000 portfolio. So that's what you really have to keep in mind when you first start. It sucks. I know, I've been there. When you first start with like $1,000 and you're only making like $50 a day or $100 a day, it feels like a lot of work to make that $50 or that $100. But then as it keeps compounding, when you're out a few months, that $50 or $100 turns into $1,000 a day or $2,000 a day. And then you're like, wow, those compounding interests really paid off. Like this was worth the hard work that I put in. And so that's what you guys want to shoot for as traders, at least my opinion. Suri or TJ, you got any input before I cut this?
Not really. I think you covered everything on that. The compound interest, just don't see it as a dollar gain, see it as a percentage gain.
Absolutely. Always
That's
look at
all
percentage.
you need to do.
Yeah. Yep.
And these flags, just as Captain Rocket said, just trade a few times a day. Trading less is usually more. Because you focus on good trades instead of trading for huge moves in the market or anything like that. I'm a bit of a hypocrite because I'm one of those scalpers that he's talking about. I will go long, go short, and I'll trade on the 1 minute. I'll trade a single candle. But it's all about consistency. If you can find something that works, and believe me, flags work both ways. Just go for flags and be patient. Don't go, oh, I need 2.5% today when you have 2.4%. Just call it quits. That's good enough. You don't need to make up for losses as well. If you lose 2.5% one day, don't go for 5% the next day. It will impair your judgment. Just go for 2.5% again. It may have set you back a day. So what? Just win the next day again and you'll be fine. I suppose that's all my input will be.
That's awesomely said. And then also, really quick, just while I'm looking at it, if you're having difficulty, you can always do the VWAP and 9 EMA method. Like if you waited for 2 candlesticks below here and got in, you don't cross back above the VWAP, so you're still good to be in the trade, and you would have got paid on this. As long as you're staying below the 9 EMA, you can stay in this trade. And then the 9 EMA becomes your stop loss here. Most people would get out, somewhere around here, but possibly even this candle where you have this longer wick. But yeah, this is easy to grow an account as well. The 9 EMA and VWAP.
For that strategy, would you just keep that put open until the VWAP catches up, which is never in this case,
I mean,
depending on your expiry.
So my mentor says to just use the 9 EMA or the VWAP as your stop loss. Either or.
So you would have full on, like from halfway through the day here,
Yeah.
you would have just opened a position, closed just before the end.
Right here. No, you would have closed here.
Oh, well, on the formation of that bear flag.
Yeah.
That makes a lot of sense.
But I mean, this is an amazing.
So you
trade.
don't just, you don't just like rely solely on the VWAP, is what he was saying.
No, so it's either or. So to enter the trade, you want it to be above or below both. But for your exit, either or will be your stop loss.
Got ya.
All right. It doesn't look like we have any questions, so I'm going to cut it here. Like always, much love, everybody. I hope this helps some of you out. My DMs are always open if you have questions, or you can always just tag me or at me, in any channel, and I'll answer your question as soon as I can. Yeah. Anyway, everybody have a great day. Have a good weekend. Take care. Much love. God bless.